please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. See the intraday chart of Adani Enterprises. So obviously now the next pressure point is the Adani group of stocks, and we saw that even yesterday as well. Look at that move on Adani Enterprises, now approaching almost a 10% fall on that stock, 8.5% to be precise. Ashwani and Mitesh with us for BTST calls. Ashwani, not a good ending for the market. Thoughts on the index and the BTST calls?
See, we're in a very strong accelerated downtrend, and this acceleration will not turn around very easily because the bear has a lot of power now. So any 20-30 point pullback he's willing to sell. You are closing hardly 10 points from the 200-day moving average, so even there too much support is unlikely to happen. So at some point we should go below 10,000. That looks like a good likelihood. So for the day, Adani Port is a sell with a stop of 385, target of 368. ICICI Prudential is a sell with a stop of 386, target of 369. And NIT Tech is a buy with a stop of 870, target of 905.
Okay, but Ashwani, I mean, just to play devil's advocate, it's already down 7% on Adani Port. So any merit on selling the stock now, or would you want to wait for pullback to sell?
Pullbacks happen in a market which is stable. Here you can go on falling 7-8% a day, and sometimes it doesn't work. What is critical is today it's broken is 200, and it's also broken a range from about 380 to 450. So basically you're looking at 300, 310, and now the falls will be fairly crunching because as you can see, since yesterday stocks have started falling 8-10%, who are the stocks which are relatively decent. So this is the kind of a market that you are now going to enter: fast falls and fairly deep correction.
On a lighter note, Anuj, I was just thinking, when you get those news flashes, right, that PNB CMD has been called in for questioning SFIO, etc. I just wonder if they're going to do that. When will they handle the other bigger problem, which was the bad loans, which was the debt resolution, etc. But I think that's just on a lighter note. There's too many issues right now for bankers to perhaps deal with. Okay, Mitesh, let's get your calls in as well. What are you going with last half hour?
So two STVT calls. Bajaj Finance is a STVT with a stop at 1625. That's something which is showing mild expansion on the downside. So I would go with STVT with a stop at 1625 and a target of roughly around, target of 1590. And CESC is STVT with a stop at 979 for targets of 954.
Okay, Ashwani, a word on IT. Do you think that still remains a bit of a safe haven?
What is a safe haven? See, if you are not making money and not losing, for example, how does it help you? So, these things all equalize, and on a bad day, both banks and IT will fall. If you want to make money, the market trend is down, go and short what is falling, which is NBFCs, banks. That is a clearer trade. Now your cute trades will work once in a while, but this is not the market to try out contra trades.
Tahir Badshah is with us now. Tahir, can you hear me now?
Yes, I can hear you.
Okay, so I was asking you a question that last year we used to ask you, is there a problem of plenty? Where are you investing the 20,000 crores of money that you're getting every month? How things have changed now? Is there a redemption pressure, and how are you telling your clients to sort of wait through this period?
So no, far from it. We don't really think we have redemption pressures either as an industry or as a firm or any such thing. So I think that's not the situation. In fact, I think at the margin, that some part of that challenge that we as investors have had for the last many months is gradually trying to kind of resolve itself in the manner that the markets are correcting, and therefore some of the things have started to get into a zone of attractiveness. I wouldn't say absolute attractiveness, but somewhere down the line, over the next 5-7% correction, if at all, of the market, there would be certain opportunities which would be very compelling. And we've seen some of our aggregate portfolio valuations also in the last couple of months moderate quite well as a combination of few things. Earnings have probably been a little better than expected. Time corrections in many of the stocks, absolute corrections in quite a number of stocks. A good number of, a little bit of rollover to the next year as well in terms of the target earnings expectations. So I think all this has led to P multiples on the aggregate portfolios coming off to now a little more reasonable levels, and therefore it has kind of given us also the flexibility, the freedom, and the conviction to go ahead and push a little bit more to investors, which we were probably not in a position to do very convincingly in the prior 6 months or prior 1 year.
Okay. By the way, that newsflash that you're seeing on your screen now, this government official is saying industrial alcohol, not extra neutral alcohol, which is the fear that's led to the kind of collapse we've seen on a Radico as well as on United Spirits. Radico is trying to show some recovery. In fact, Radico is responding to this news. USL is also not bad in a market like this. There's a bit of a hope rally, or maybe, if not a rally, at least people covering some of the short positions. So that's these two stocks in focus ahead of the GST meeting. I
would have thought in this market actually
they should do better.
Should do well. So that normally should happen. At least the liquor stocks, they should do well.
Well, maybe it's happening. See the way the USL chart is trending now. Okay, on that note, Tahir, good afternoon. Too many factors coming together for the mutual fund world, right? Because on one hand, there's the market's volatility, then there's LTCG, and then this whole SEBI classification. Now, explain to us what happens. For instance, in your mid-cap fund, there is some exposure to a name like Maruti as well. Now, once the new notification comes into place, will there be some selling to align with the new notification? So therefore, will that add to the market volatility?
Not necessary, and hard to say, because different products are going to get realigned or recategorized depending upon how each firm wants their products to be positioned. And I think, at least from our perspective, the way we have probably seen it. So, for example, in our mid-cap fund, we are supposed to have a minimum of 65% exposure to the mid-cap space, as defined by SEBI's market cap definition, and I don't think that's a challenge, and therefore the importance is about that 65% number. The balance 35%, you can swing it whichever way you like. So if you were to probably be in large caps or maybe in small caps, that's absolutely fine. So I think if you were to probably hold on to some of your large caps, if you want to, and if you have a presence in, and if you like the names, you probably may not be compelled to sell out as a result of this reclassification or recategorization. So the way we are seeing it at our end, I'm sure many of our peers also would have similar kind of positionings in many of the funds, and it could lead to some places where you might even have to buy a few things. For example, in one of our funds, we actually are a little short on our mid-cap exposure compared to what we should be ideally at, and in a way, therefore, it opens up a decent, interesting possibility, probability for us to increase our mid-cap exposure, especially now that the mid-cap space has been seeing a decent correction.
Okay, 10,128 is the 200-day moving average. We are at 10,148. So holding that just by 20 points, and it's a rising 200-day moving average. So tomorrow, of course, the 200 DMA would be slightly higher than what it is right now. But we are very close there. And interestingly, a lot of stocks are now making the lows of the day. Let's just see some of these stocks once again. And HDFC, just pull out the intraday chart of HDFC, the big financial stock. Once again, the FI favorite stocks, and that's happening in last half an hour, last 1 hour on a consistent basis. Just look at that, HDFC's intraday chart. Now, this is not, maybe a few traders sitting here or there and shorting few lots. This is clearly a bit of a delivery selling which has happened from 1775 to 1760 on HDFC in a matter of 3 or 4 minutes has happened, and that single-handedly pulled down the index. Actually, not single-handedly. Just look at the intraday chart of Reliance as well. Now, Reliance is making the lows of the day. HDFC Bank has made the low of the day. The highest of the market cap stocks are making the lows of the day. Apart from that, of course, SBI and ICICI as well, almost there. 10,142 now. Ashwani, it's just 14 points away from 200 DMA.
It will get taken out. See, that's what I'm saying. The structure of the market has been spoiled the fund flow has been disturbed, and till that remains disturbed, and till everybody who wanted zero tax is out, I don't think the market is going to reverse. And every day, last half an hour, this starts to happen. So my sense is that maybe tomorrow morning it should go, if not today.
Okay. Tahir, that's the big problem for the market, right? And mid-caps, of course, would fall in a market like this. But the largest stocks, the HDFC Twins, the Marutis, the Reliances of the world, consistently seeing delivery selling. And we've seen even the DI investments has slowed down a bit.
Yeah, I mean, there's been some indication of that as well, but it's not that well established either. So we've seen the first 1 month where on a month-on-month basis we've seen a moderation in case of domestic flows from Jan to Feb. Is it very strong evidence to suggest any kind of trend as yet? Hard to say. But of course, it's come in a month when there has been a confluence of some of these negative factors led by LTCG, led by what's been happening globally as well as domestically in terms of the banking sector and so on. So there is a certain amount of nervousness, and I think it was in a way, the reasons always tend to be different, and we don't really know what reasons will actually take the market down. But that's exactly what we were kind of discussing. We've been kind of discussing, and as a market, we've been worried about that. Valuations had been too high, and markets were on a one-way trip. So we needed some bout of correction, some bit of readjustment of multiples, readjustment of risk in the market, and I think that's happening. Some part of it is also impacting the large cap space to that extent, especially in some of the names which have seen decent amount of returns in the recent past. So I think it's a typical correction of the market, and probably as expected and as was also feared that the mid cap space was on a boil. Valuations were a little stretched, and we are seeing the correction being a little deeper out there compared to what we are seeing in the large cap. So market is playing out the way to a good extent on anticipated lines, I would think.
Tahir, in your growth fund, the Invesco Growth Fund, there's a large exposure to banking and financial services. I think almost 29% is banking. There is also a fair amount of exposure to IT, about 6-7%. What is your view on these two pillars of the market? And banks first. I mean, you do have holdings like ICICI Bank, and that's seeing significant price erosion in the last 5-6 sessions.
Yes, so ICICI Bank is one of the holdings as part of the banking sector allocation to a growth fund, but a large part of it has been to non-corporate dominated banks, and that has kind of worked out pretty well for us in the recent past of that 29%. So plus a few NBFCs which were either growth at reasonable price, or some of them were some turnaround candidates as well, and which have seen a decent amount of turnaround and growth start coming in for some of these names on the NBFCs. So I think as a whole, 29% has worked out pretty well for us, given that it has been the larger chunk of the overall allocation of the portfolio, and it has, and despite that, we've had the kind of return outcomes that we've been able to generate over the last 1 year, 3 years as well on a very consistent basis. So I think that's how it has been for the banking side for the growth fund. IT as a sector, the growth fund in a way actually follows a policy where we try to ensure some minimum representation to most of the important sectors. So we generally don't tend to be less than 50% underweight any particular sector, nor more than 50% overweight in a particular sector. And that in a way has kind of worked out well for us in, let's say, a sector like IT, where last 2-3 months have been really very good. So even though we were not overweight, but we've had a 5-6% exposure, and some of the company exposure specific. So I think it's been a good situation to be in terms of the overall strategy of the fund.
All right, Tahir, thanks a lot for your time. Always good talking to you. That's the view from Invesco Mutual Fund. By the way, the market is right now, seeing selling now in the erstwhile strong stocks as well. Just pull out the intraday chart of Tata Elxsi. That stock, of course, had a one-way rally, and now that is beginning to unravel. So Tata Elxsi stock right now down about 4%, moving to the low point of the day. Before we take a break, Ashwani, quick chart check on this one.
See, the IT index is now also giving up ground. That's what I said, This kind of selling, I don't think one sector will be able to protect you beyond a point. I think Tata Elxsi rally is probably now terminated. Maybe you'll see 940, 950. But the better short trade is obviously the financials. IT, beyond, say 2 or 3 stocks like Mindtree, NIT Tech, etc., may not be able to help you a whole lot.
Okay, all right, let's take a break. On that note, we will come back on the other side. 15 minutes to go. Let's see how these last 15 minutes play out. Welcome back. What an afternoon it's turning out to be. A stock like Fortis is now down 9% and still counting. We've been speaking about the Adani Group. We've been speaking to you about stocks like JP Associates. So what an afternoon it's really turning out to be. A series of such afternoons, actually. Devang Mehta of Centrum Wealth Management is with us now. Devang, thanks for joining in. Are you advising your clients to go out and buy anything? Any 1 or 2 stocks which you think should be picked up in this fall?
Good afternoon, Surbhi. Yes, I think probably we know that this is a huge carnage happening in the market, and there can be a couple of sectors and stocks which can be looked into, and primarily I think we have been more or less focused on the rural agri slash the infrastructure theme which the budget presented it with. So yes, some names in the infrastructure space which have seen huge corrections, something like NBCC should be kept on the radar, National Buildings and Construction Corporation, a huge 80-85,000 crore order book, plus a zero debt company, which generally you don't find in the infrastructure space, project management consultancy. Again, it's an interesting play. The stock has corrected from somewhere around 280 to roughly around 190, 195 levels. I think it's such stories probably could bounce back also, and also if somebody has a 2-3 year horizon, there is where a lot of order flow would also come in, and also the execution will pick up going forward.
Okay, Devang, good afternoon. Thoughts on sugar stocks? Anything that you would want to buy?
I think I would clearly tend to avoid cyclicals at this point, sugar or in fact even steel, though I think there are evidences that there will be global recovery, but probably, of course, would avoid the steel sector at this point because of the trade wars. But sugar, precisely, again, I would say that we have seen most of the rally happening, and it's very difficult to probably time any such cyclical. So I think we would refrain from this difficult space, rather be in very basic, or I can say rather being extravagant, be in space where you know that there will be a bounce back and you will earn big time in the next 6 months, 9 months time.
Okay, all right. On that note, let's move to some market opinion. Earlier in the day, we caught up with Arvind Sanger, managing partner at Geosphere Capital Management, to get a sense on whether there are more reasons left which could take this market lower, or whether we've pretty much seen all kinds of negative news that is out there.
Well, I mean, I think India has its own challenges. Bank situation, and that seems to have become the anchor that is driving the market lower. But the global situation has gotten a lot less favorable, and that too is causing a little bit of a pause in the liquidity flow that has been coming to the domestic market. So global investors are nervous about global cues. If global trade war is going to break out, then investment in global markets becomes less desirable or more dangerous, and therefore investors are pulling back a little bit from that. And then India itself is seeing some challenges, although it's ironic that the Indian earnings recovery and the economic recovery seems to be finally starting to move in the right direction, with all of the challenges of the last 12 to 15 months now in the rearview mirror. But global liquidity is a problem, and India banking situation keeps dragging out. And I think we're fundamentally more optimistic about India, including the bad loan situation, but the political situation in India also, notwithstanding the Northeast results, is going to be challenging this year because of concerns about what the tea leaves are reading for the 2019 Lok Sabha election. So I think those are some of the reasons why the markets are probably, even in India, not likely to see any kind of a V-shaped recovery and likely to remain somewhat range bound.
From the index point of view, the problem is that some of the urban consumption stocks and some of the financials have the highest weight in the index, and they have led the market rally. So this year, do you think the portfolio focus should be completely different, more towards rural stocks, more towards agri stocks?
I think rural and agri is an easy macro call to make, but I think there are other areas. Clearly, the road and infrastructure sector is an area where we could continue to see more action. The Bharatmala scheme, and then a lot of stuff going on in terms of urban infrastructure, in terms of metros and what have you, as well as potentially a lot going on in the affordable housing. So there are areas, and so I think even some of the NBFCs that are focusing on affordable housing, some of the companies that focus on that, as well as other infrastructure, could benefit. So, and I think the cyclical recovery, as it broadens out, it's been, I think there are many opportunities that are going to come to the front from a fundamental standpoint. I think the macro risks, both on the India political front and on the global macro front, are going to be a headwind. But on the other hand, I think the earnings fundamentals are likely to be more broad-based in a recovery sense. And even the IT sector, which has been, under a cloud, looks like might start to see some signs of stabilization and recovery, and that could be another area that could, continue to rebound from here.
Do you believe that this is still a bull market correction, or have we entered into a bear market phase now?
I think it is a bull market correction, but the problem with bull market corrections is, they can be very short in duration, or they can be somewhat, dragged out, where hitting the previous highs might take, a couple of quarters. My view would be it's more the latter than the former. But in the end, we're looking for individual stocks that we should buy. And we're looking for, big sell-offs coming out in some of the stocks that we have our eye on.
At the moment, what's your sense? Having fallen, 1,000 points from the all-time highs, is it attractive? Are you a buyer right now?
I'm a buyer of individual stocks, and I think I'm finding one or two stocks that have gotten to our levels. There are others that are still a little further away. So I think the market, in our opinion, is not done chopping around in terms of a trading range, and our goal is not to be, we're not worried that the market's going to run away from us in terms of, us missing. So we're being somewhat patient in putting money to work, but we are starting to put money to work.
Okay. Are you a buyer in PNB or any other PSU bank?
Well, we did buy one PSU bank, but we were a little early, but it was luckily in small size. But on the other hand, we own some of the NBFCs that have continued to do well, although they pulled back a little bit. And then we've nibbled. Actually, we've owned one of the private sector bank that's in trouble. But I think the Axis Bank, ICICI Bank concerns with the two CEOs getting called in terms of the whole PNB inquiry, I think is a bit of an overreaction. My sense is that this whole PNB situation will not drag the banking sector down in the way that the whole NPA situation has. This is a one-off, clearly a failure for PSU Bank, but I'm not rushing in and buying PSU banks.
Well, there's been a bit of a pullback from the low point for the Nifty, about 20-25 points, or the Sensex about 75 points. Just be a case of shorts booking some profit. We are close to the 200-day moving average. So for now, at least, you're defending that. This is, of course, from 3 p.m. There's been a bit of a recovery, and a couple of stocks where we have seen some bit of pullback. Again, may not count for much, but IndusInd Bank, for example, Kotak, the stronger ones. Kotak, in fact, is ending pretty close to its highs. So is IndusInd Bank, still in the red, but a couple of these stocks are at least trying to make a move on the upside. Ashwani, you're fairly certain that 200 DMA will go, but what would be the next levels to track then on the Nifty, or is this not a market where you look at support marks at all?
See, this is a business which does not have the word certainty in it. But 200-day moving average should have had a bigger bounce. Given that, and given that somebody has a reason to sell and get out, I would think it will get taken out, and let's hope it happens tomorrow. And why should we look at a down market worse than a market that's going up? The stock market has two sides, up and down, and you can make money on both sides. So my advice is make money on the downside instead of looking for support every 20 points.
Oh no, that point is taken, Ashwani. Of course, and as we discussed yesterday as well, there's no harm in selling stocks. If the market is giving you that opportunity, this has been a tradable correction. But the limited point, of course, is that 90% of the retail is playing the market on the long side, not on the short side.
Buying stocks to watch them go up.
Exactly, a bit of a bias. Of course, Ashwani is a trader and a professional trader, so there's a bit of a difference, but that's a limited point.
Yeah, as we're getting down to the close, just want to pull up the intraday on Yes Bank. I mean, just an example of the way stocks are getting tossed around. This is last 1 minute of trade left, and yet you're getting, not the small cap index, Yes Bank. Just an example of, look at the kind of declines that are coming in. Anuj, what's the takeaway from today?
Yeah, the takeaway is simple that, the correction has still some legs to go. Now, we're so close to 200-day moving average, perhaps we see a bit of a bounce. But, this is a market in which there's one large player who just wants to sell. And this perhaps could continue up until 31st March because of this whole technical factor, Surabhi. After that will be interesting because stocks would have, reached interesting levels. And all you would need is just that selling to be absorbed, and there could be sharp recovery as well, April onwards. But that, of course, we'll find out. For now, it's a bit of a falling knife at this point in time. Let's talk about the stocks that led the market lower. Once again, the large caps were down quite a bit. The big drag today on the market was from Reliance. That was down about 2%. ICICI, 2.5%. State Bank, 3.5%. These were the big boys which dragged the markets. Perhaps you may want to add Larsen and Toubro as well, down about 1.7%. Adani Ports, of course, was the biggest loser, 6.5% lower on that one from the index. Bharti Airtel down 2%, HPCL down 2%, Sun Pharma, Tata Steel, HDFC itself was down. Bajaj Finance also down quite a bit. On the way up, not too many stocks actually. HCL Tech was up 2%. ITC, okay, among the bigger ones, ITC was the one which sort of held one end up for the bulls, so 1.2% higher than that one. Z Entertainment, it's seen some buying over the last few days, was one of our stocks to track as well this morning. That was up about 1%, and Maruti was up about 1%, but more losers than gainers quite clearly.
Oh, absolutely. On the mid-cap side of the market, almost 300 points gone, 1.5% lower on the index. Let's bring it down to individual stocks then. And you just had to have the word bank in your stock name, and I mean, you know the direction. So Karnataka Bank, 8% down, whether you're looking at an Andhra Bank or you're looking at a Canara Bank. IDBI Bank also finally down about 3.5 to 4% today. South Indian Bank, I mean, all kinds of banking stocks were down, whether PSU or not. It was just a downward moving sort of slope. Then, of course, a couple of indebted groups or large conglomerates where there was clearly an issue. So the Adani issue played out well beyond Adani Ports. If you're talking about something like an Adani Transmission, 7% down, Power 7% down, Adani Enterprises recovered some of the cuts, but still down about 6.5–7%. Then ADAG also had its own set of troubles. Reliance Capital, Reliance Communication, Reliance Power. Most of these stocks have ended on the lower side. The JP group of stocks, anywhere where there is some leverage, debt, overarching issues. So JP had a rough session today, as did Fortis Healthcare, by the way. Fortis has lost what, 8.5–9% and counting. Today was a very rough day for Bombay Dyeing. This is a stock that has been on a vertical move in most of 2017. Today was a big day of unwinding, 8% down on that one. And then if we talk about some more losers, then some other names are going to come up. Let's actually pull up USL and Radico Khaitan. Interesting move on these stocks, because towards the end the news was coming in that if GST is included on alcohol, it will be industrial alcohol, maybe not extra neutral alcohol. Not confirmed, but then that was the talk. So USL is going home with gains of about 1–1.5% thereabouts. Actually, not too many gainers to speak of. I can definitely count in an NIIT Tech and a Hexaware. These were some of the names that were spared the blushes, some buying there. Maybe a Central Bank of India, a bit of an outlier, the one banking stock that didn't fall today. But otherwise, Anuj, as you said, far too many losers than gainers on the screen.
Oh yes, and I think we are reaching desperation stage now. I mean, I'm going through my Twitter feed for now, 8 to 10 people saying stop wearing red. So I think now that
if
stage.
only it was that simple, right?
It's not, of course. It's not. It's the colors of the dress don't make any difference. But let's end this discussion. Then let's take final thoughts from all our experts who are with us. Ashwani, one question here is that we had a big, one-way journey on the way up last year. Could we be looking at a down year this year, in which it's not about just a bull market correction which ends at 10%, 15%, maybe a slow and steady move on the downside this year?
Well, right now it's fast and furious. See, the point is one way up leads to one way down. That's, part of life. I think we started this rally at about 8,000. As long as we are holding on to 9,500, I can give it to you, it's a bull market correction. But please tell me, does it hurt less to lose money in a bull market correction than a bear market? What difference does it make? So everybody has their own benchmark. Somebody will say below 200, it's a bear market. Somebody else will say 50% of the last entire move is the level. That doesn't matter. What matters is where will the selling get done? And we've seen several of these instances where, short selling was stopped in, I think, PSU banks or something, and those guys kept on rallying. Here, this technical issue of this, adjustment will continue till 31st March. And till that time, you can go to any level. Because if somebody wants out and somebody wants out at any price, then the market will not stop falling. Chances are till 31st of March. My sense is on that date, you would have bottomed out. So that would be a good day to buy.
Though I don't understand what gains are people booking, Ashwani. I mean, since the 1st of February, this market has only gone in one direction. So, I mean, on a lighter note, I have no idea what gains people are trying to book. Your gains till 31st January anyway, grandfathered. But anyway, that's a different academic argument. Mitesh, your thoughts looking at today's close, advice for tomorrow?
I think, the only way we'll approach is possibly, since we haven't got a signal of reversal, so you still continue to be short, but given the fact that we are close to 200-day average, tactically, I think I would just want to tighten the stop losses. If they are being triggered, I think that's fine. You've been riding the downtrend nicely for the last few days. And I think aggressive shorting now, once we start breaking below 10,100 levels, I think then we can look at sub 10,000 levels also being tested. So you might just want to tactically adjust the theme, but overall it remains a sell on more of a sell side kind of a market. And in case you get a stronger bounce back from the 200-day average, then anything close to about 10,250, 280 zone would be excellent levels to go short.
Okay, Devang, finally closing thoughts from you as well. If we look at some of the financial names that have fallen the most, including the NBFC universe, would you like to buy anything at this point?
Yes, I think, Surbhi, the entire year, people have been praying and hoping and waiting for this correction to happen. And once we had this correction this month, I think everybody is generally being bearish across the board. So to me, at this point, if the financials don't come back to the fore, and that too NBFCs, some NBFCs like the consumer finance companies, or I can say some housing finance companies, plus a couple of private banks, this all should be part of your shopping list. And I think one should sort of stagger out their investment in this next 1 or 2 months, which would probably give you a sort of a good portfolio approach. And over the next 1 or 2 years, I think there is a good amount of money to be made if somebody places his bets on this type of a portfolio.
Okay, all right, gentlemen. Thank you very much for joining in, taking us through market close. We will see you again with the markets shortly. Okay, some news flashes coming in, contemplating extending the Aadhaar linkage deadline. This was widely anticipated that you will have more time beyond the 31st of March to link up all your bank accounts and the other important accounts with Aadhaar. On that note, let's take a quick break. We will have more news for you on the other side. The cabinet is going to be taking up the proposals by an interministerial group on deferring spectrum payouts by telecom companies. We will get you the details in just a moment.
Welcome back to Closing Bell. Well, let's talk about commodities now, and especially the sugar prices, which have been yet again under pressure. Remember, on estimated lines, ISMA today increased the sugar output estimates, and 29.5 million tons actually is on the higher side of the band that the markets were working with. That clearly has been putting pressure on the sugar prices. So while that, of course, is out of the way, the next few things to watch out for are on whether or not we are looking at export duty being scrapped. Is the government now looking to support the sector by incentivizing exports here? And of course, sugar cess is something that the government also is looking at in sense of asking feedback from the ministries. So those are the few things now you will need to watch out for with the kind of output estimates that we are staring at in sense of sugar. Let's go across then to Avinash Verma, DG ISMA, and he joins us now to talk more about that. And Avinash, hi, good to have you. The estimates, of course, are on the higher side, as we have been discussing in last few days. You have expected that number there. But where does it go from here, especially when it comes to exports? What would the industry need to be competitive enough to be able to export?
Yeah, just to look at the numbers, if we are going to produce 295 lakh tons and we're going to consume 250 lakh tons, that means 295 minus 250, we have 45 lakh tons, which is extra. Now, we started the year with about less than 39 lakh tons of opening stocks. So that 39 can go up by another couple of million tons to about 55. So this extra 45, broadly speaking, we have about 20-25 lakh tons, which needs to be taken care of. And we believe that we can, in the next 6 to 7 months, export about 20 lakh tons into the international market. We understand there is a loss, but that loss can easily get covered if the domestic prices improve by just about ₹1 or more per kilo. So therefore, we would be looking forward for an announcement from the government, number one, removal of the export duty, and number two, an export quota to each and every sugar mill that they did about 2 years back, to the extent of about 20 lakh tons.
But Avinash, how would that make you competitive in the global markets? Because we are looking at a global sugar surplus and the international sugar prices also are trading at a 7-month lows.
See, there are two ways to look at it. Number one is the quantum that we need to export is less than 10% of our domestic consumption. So if we lose about 10 rupees on our exports per kilo, and if the domestic prices improve by ₹1, the ratio is about 1:9 because we are selling about 9 times more than what we are exporting in the domestic market. And therefore, if the domestic prices improve by ₹1, 10 rupee per kilo on my exports. So that is one logic we are working on and trying to convince our sugar mills. But that has to be done by each and every sugar mill. That is why we are looking at a quota. We can't be having that some people export and other people only benefit out of it. Secondly, we are telling the government that, look here, you have increased the FRP quite drastically. We are unable to pay this kind of FRP because the sugar prices have come down. And therefore, we are requesting them that, like 2 years back, they had given ₹4.50 per quintal of sugar cane to the farmers directly into their bank accounts. So we are saying that why can't you come out with a similar scheme and bear a part of the FRP, especially the part that you have increased in this year.
Avinash, the other thing, of course, is about the cess that the government is looking to, looking to get feedback from the states. What is your sense on that? How would that change the game?
Sorry, I didn't get you there.
The government also, we understand from a couple of bites that we got from the Food Ministry today, that the government also is looking at the sugar cess. That is something that they have asked on feedback from the state governments.
Oh, yes. I mean, that is something that we have been actually submitting before the government for almost last 3 years. And the CACP, the institution that recommends the FRP to the government, has also been saying that restrict the cane price paying to the capacity of the sugar mills. That is, link the liability of the sugar mills to a revenue sharing formula. And if that is below the FRP that the government wants to give the farmers, the gap should be filled up through a fund. Now they are moving one step forward and trying to find funds for the particular fund that can be used to bridge that gap. So this says, if the government brings in, can develop a fund through which the cane price of the farmers could be paid to that extent that we are unable to pay. That will reduce the cane price arrears, improve our viability, and at the same time ensure that the government doesn't have to keep on bothering with such schemes. Now, the main thing about this cess will be that it will be implemented in years when the sugar prices are depressed. And when the sugar prices are depressed, I don't think any consumer would mind paying 2 rupees cess, because finally he pays the same retail price or probably lower than that which he was paying last year.
So, Avinash, what is your sense? What do you see going through when it comes to sugar as an industry? What needs to be done at a priority level like right now? And where do you see the prices headed from here on?
One short-term and immediate measure is export quota to the extent of 2 million tons across the country, and the government paying a part of the FRP directly to the farmers that they did 2 years back. That is an immediate thing that the government should do in the next 15 days or 20 days. On a long-term or a medium-term basis, bring stress on the consumers when the sugar prices are depressed, build up that fund to pay to the farmers a part of the FRP directly, so that it reduces the burden of the sugar industry, especially when we are unable to pay that FRP.
And where do you see the prices headed really? Because I was talking to some industry participants earlier, analysts actually, and they said we could see the prices decline by nearly 5 to 7% in next couple of months until the summer demand actually picks up. Do you see that much of a bearishness?
See, if the government brings in this export quota and we are able to find contracts and start exporting in the next month or so, the prices will be under pressure. So the way to control the prices from falling any further would be that the government announces a 2 million tons very quickly in the next couple of weeks.
All right, so that really is the view coming in on sugar. Abhinash, thank you so much for joining us. Clearly, there need to be some steps taken by the government immediately so that you can see some support come in for this sector. As of now, we have seen the prices continue to decline for this marketing season that started from the month of October. There are still some mills which are crushing sugar, and that has been putting pressure on prices. 29.5 million tons is what we are looking at as sugar production. Exports, incentives, and of course, the sugar cess that Abhinash was talking about are a few things that we can look forward to in sense of from government. But shifting focus now and to the agri space full on, the Niti Aayog will hold its first meeting with the states on MSP on March 9th. Avik Saha, national convener of Jai Kisan Andolan, now joins us on the phone line to talk more about that. Avik, hi, it's a pleasure to have you. What we understand is that you are launching an MSP awareness kind of a program starting 14th of March. First of all, let's talk about that, on why that needs to be done.
It's not so much awareness. You see, MSP, rightly or wrongly, has been announced by the government, and the finance minister has specifically told the country that this time the government will ensure that farmers get MSP. He's even gone to the extent of saying either the government will purchase, or the government, or not or, and the government will ask Niti Aayog to consult the central government and the state government and come up with a mechanism so that farmers get MSP. Now, the truth of this is the farmers need to know, the nation needs to know, and the government itself needs to know. So this Satyagraha, the seeking of truth, is a trail we are building right from Karnataka up to Uttarakhand for the first phase, so that the truth is established. The truth could be favorable. But if it's not, then there's need for concern, and it's more to flag and alert the government about MSP than anything else.
Sure. Avik, with the conversations that we've had in last 24 hours with either Niti Aayog or the ministry officials also has been that while the MSP is there, the formula is ready, it really is about the implementation or honouring the MSP really for all of those commodities. Where do you see the concerns coming in? Is it about the state governments really? Is that where the problem really arises?
The state governments have a role to play, in all honesty, which is why we are going to Karnataka, Andhra, Telangana, none of which are from the central government's party. And we want the state governments to also proactively participate in this. But you must remember, MSP is announced by the central government, and it must have the legal teeth to enforce it. The government doesn't have to spend money. The government just has to ensure that law is followed.
So, Avik, what would you say? What really needs to be done from here on priority basis? Because the Rabi crop arrivals have already started in the market. I was reading your report, which shows that many of the commodity prices are way below MSP prices even now. So, what really needs to be done on an immediate basis?
MSP has to become a serious concern with the government. The more we speak about it, and thank you for doing this show, the more action on the ground takes place. You must remember, MSP is given or taken at very faraway locations, away from the centers of power where the limelight is. So once these things are focused, the government will hopefully strap up and ensure that law reaches those lawless places and it's enforced. But having said that, the government also has political compulsions, and there are the classes who are looting and the classes who are being looted. So the government must now interfere with some amount of funds, which is currently woefully low. This budget has 200 crores for this intervention. And as we've tried to indicate, I mean, we hope this doesn't happen. But if this trend just on chana, which is not a major crop, happens, then the farmers of the country will lose 6,000 odd crores. That's a lot of money to lose for people who are not being able to repay their debts and are committing suicide.
Well, those numbers, of course, are huge, Avik, and but we do hope that the government does take notice of this. As of now, of course, there is this March 9th meeting, and you also are going state to state from March 14th. We, of course, will touch base with you yet again on what really opens up and actually happens in the next week and 10 days as Rabi arrivals start thick in the markets there. Thank you so much for joining us, Avik Saha. And with that, it's completely out of time on this edition of Closing Bell. Thank you for watching.